Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Checking in on Apple daily, weekly, shorter term time frames. So a lower low was hit today. We saw the new low from the reaction to earnings by breaking 113.31. The bulls did hold up fairly well today compared to the market, but then the second half of the day and towards the end, we did get back most of those gains. So we have an indecision candlestick here. It favors the bears because we're still seeing lower highs and lower lows. The overall market favors the bears in the short term. So we're looking for Apple to potentially test this 50-day moving average support, which will be in the mid 112 range in the next couple of days. And the must hold level is 111.55, the double bottom here, the base of support built before heading to higher highs. If we don't form a higher low compared to that level, we risk changing the trend to favor the bears on the daily time frame. The weekly, we can see that weak close on increased bear volume last week. 118, very clear resistance. Look at the resistance back from the end of 2015. Topping out at 118 4 weeks in a row, topping out 3 weeks here. So that resistance still stands. And the 10-week moving average support is key at 112.71. So the 50-day moving average will be catching up to that 10-week moving average support. And that is the must-hold level for the bulls, or we are headed to 111.55. And really that 111.55 is the must-hold. So need a new term for the would like to hold, I guess we'll call it. Either way, the bears are in control of the short term, and the hourly chart for Apple has shown some key weakness. So here's the dump. This is a 5-day hourly chart. The dump on the earnings. We saw the bounce play out. We gained the 20-period moving average resistance as support. That was a big sigh of relief for the bulls. Now they want to see some momentum to the upside. But the next day, they could not hold that level on the back test of support. They lost it. Here the next day, they gained it as support. Could not hold the back test. Further lows. Here today, we gained it as support and then increasing bear volume showing weakness. And towards the end of the day, we were back testing and rejecting from this resistance, showing that weakness. So the point being, if you're not back testing and holding that moving average, you're not forming higher lows. You need to build a base of support and then continue to the upside. Otherwise, we're just going to continue seeing lower highs and lower lows, which is what has developed since that bounce. So there's our high in the extended hours trading, lower high, and then another lower high today. So that just shows the bears are strong, bear volume at the end of the day, and looking like we are heading to the mid 112s. And again, check out my SPY video. We have a big day Wednesday coming up, and that is going to determine the short-term action on Apple this week, depending on what the market does. So I appreciate you watching. We'll check back in tomorrow. Have a great night. Thanks for all the likes and the shares. See you soon.